Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, October 20th, 2022. Before I jump into the charts, please click like each and every time you watch the daily Tesla report, especially if you do like it, because it helps us quite a bit, actually, with our YouTube web presence, people finding out about us. The more likes we get, the more we show up at the top of search results. So let's jump to the charts. I'll just start with today once again. We have this former descending descending trend line today at 226.87. It's in close correlation with the high of the recent low from last week. I think that's 226.26 as I recall. I don't really even have it listed. I just want to hinge off of 226.87 as our resistance through the rest of the week and our upward pivot point through the rest of October. So this is an area that can contain buying through the rest of the week. And from here, we can quite easily fall back to that 206.85 May low, a level we did actually close below last Friday. Was it? Yeah, Friday, Monday, Tuesday. Yeah, it was. It was last Friday. Wow. Anyway, we closed below it by just a bit, and then we gapped back above that whole area on Monday morning, and we really haven't looked back since. Put out this high in the 229 and change area, 229.82 actually, as you can see, as a minor point. So here we are. We're still in this range. We can fall back from 226.87 to 206.85 over the next few days. I still have very similar support and resistance in terms of intraday pivot points today. They're a little different. 222.93 is nothing more than Wednesday's high. In terms of sellable resistance, there was a lot going on in the 222 handle all day long. I think I had 222.05 on Wednesday. I've raised it to 222.93 because I think merely pushing or opening today above the 222.93 Wednesday high should result in another test of the 226.87 trend line, an area that we actually gapped up over on Tuesday morning, then fell off quickly for the rest of the day. Will the same happen today? Difficult to say, of course, but I will say that if we push or open today above 226.87, there is the chance of reaching 239.75 on an intraday basis. I don't think it's likely, but it is possible. So if we push, especially if we open today above 226.87, 239.75, not out of the question by the closing bell, where I would expect a daily high. Now, I do have carefully chosen minor points on the way up. I don't want to weigh any of those heavier than the other. There is the possibility, once again, of reaching 239.75 by the closing bell if we push or open above 226.87. And as I've said before, if we close today above 226.87, and I would rather show this chart here for that, because then it would also be above the high of the recent low. This is a meaningful low, and the high of that low is an upward pivot point if settled above 226.26. So it really is 226.87. If we close above it, not only expecting 239.75 quickly within a day or two, but the mid 260s again, into the low 270s perhaps over the next couple of weeks. I think that should be inside of 2 weeks. A high volatility move, short covered trade, people clamoring to get long, 264.64 then expected within a couple of weeks, which is really the start of a wide zone of resistance up to into the low 270s that could absorb by that point in time buying through November trade, and we can fall off from there in a meaningful way. And we'll be covering that, of course, very closely on a day-to-day basis through the rest of October. Now, downside today, let's go back to this chart here. 213.96 remains our downside 5/8 Fibonacci. That is from last Friday's low against Tuesday's high, the two extremes over the last week of trade. 213.96 is a minor intraday support level that, if tested, can contain intraday selling. But if we break, especially if we open today below 213.96, we just might test 206.85 on an intraday basis, where we could bottom out through the rest of the week. And if we close today below 206.85, the market is indicating 176.82 to 185.22, probably by the end of next week. And that's where I go back to the weekly chart to show that. There are a different set of numbers on the weekly chart, slightly off from the 176.82 to 185.22. It's 177.18 to 185.29. And I give this by the end of next week if we settle today below 206.85. As I've been mentioning, this may well be the ultimate objective anyway, following the gap and settlement below this rising two-thirds speed line a few weeks back. When we cleared 271.92 to the downside. That was the poor production numbers, as you recall, that came out on a Sunday, and Monday morning we gapped lower, and we haven't really looked back since. And having settled below 271.92, I do think that this area, 177.18 to 185.29, should be considered a longer-term objective. And if we close below 206.85, and by longer term, I'm talking 2 to 3 months. In fact, 206.85 was considered a 1 to 2 month target, and that happened inside of 2 weeks. And so we're still in this higher volatility framework that's settled back a bit over the last few days, but it's still ready to expand at a moment's notice. And so expansion of volatility, if we close above 226.87 or below 206.85. And don't be surprised with a settlement below 206.85, once again indicating this, I'll call it targeted 177.18 to 185.29 region by the end of next week, a band of channel support that held very well last May and may well contain selling through the rest of the year, especially as it converges over the next few weeks with this long-term 5/8 downside Fibonacci against A, the COVID low, and B, the all-time high from last November. This A COVID low doesn't look like much, but at the time, I could open that chart up and show you that it was the most meaningful downside pullback that Tesla had incurred since its IPO. I think that pretty much covers it. Anything beyond that would be repetitious, so I'm going to leave it at that for Thursday's Daily Tesla Report. Please click like and subscribe and share with all of your friends and colleagues. You have a great evening.